webinar on MT5 Harmonic Trading Strategy. Okay, my name is Stephen Ong. Okay, like I mentioned, I'm the speaker for tonight's session, and I'm a senior account executive with Phillip Futures and investment strategies with these Phillip Securities. So before I begin, I'd like to do a sound check. Everyone can hear me loud and clear, right? So if you can hear me, you can type yes in the question box, and if you cannot hear me, then you type no, so that maybe I can raise my volume or increase my audio. So during the webinar, if you have any questions regarding tonight's session or trading strategy or CFD or Forex or any of the products offered by Phillip Futures, do type them in on the question box, and then try to address all your questions during the Q&A session. Right? If not, I'll email you or contact you on a one-to-one basis. So that's a brief intro for tonight webinar. So it looks that everybody can hear me. So start tonight's webinar. So okay, this is a disclaimer statement. So basically, right, just the formality to go through all the regulations and rules and regulations that's regard to tonight's seminar. So basically, go to them, and if you need a copy, you can download from our website www.phillipfutures.com.sg. Okay, so tonight I'm delighted to share the topic which I'm passionate about, and that is trading the stock CFD, Forex, commodities market with the harmonic strategies using the MT5 platform, which is the MetaTrader 5. So for those who are new to trading, Phillip Futures is the first company to introduce MT5 to traders in Singapore. And not only is the MT5 most advanced trading platform available in Singapore, it is completely free for traders to use with zero commission transaction cost, and comes together with amazing functionalities and features which later I'll show to you how to use this trading platform. It is one of the most sophisticated, advanced, and yet most user-friendly trading platform ever introduced in Singapore, and it's conceived for mature traders that is absolutely free to use. So do try out our demo account, and if you're comfortable with doing a demo account, start with a live account after that. Right. So visit our website and download our trading platform, and hopefully by the end of this short presentation, right, we are able to start a win-win business partnership, and we're able to share many successful stories for years to come. Okay, just a brief intro myself. Okay, for those who just joined in, right, my name is Stephen Ong. I'm your presenter for tonight's webinar. Okay, I'm a stock and Forex broker, and I've been awarded for contributions over the years as a CFD specialist with Phillip, and also been invited by SGX to share my knowledge and expertise with investors. So tonight, my goal is very simple: is to assist traders like you who are interested in developing solid trading strategies suitable to trading interests, your risk tolerance, and resources, and then at the same time, you remain flexible enough to capitalize on the market opportunities that when they arise. So I hope I'll be able to provide traders and listeners to these webinars with the market news in a timely fashion, so that when the opportunity arises, traders are able to capitalize and realize their financial objective while effectively managing their trading risk. So again, my objective tonight is simple. I want to equip us, and to all the audience who are listening, to benefit financially from my expertise, my knowledge, my experience in Forex, futures, and CFD trading. And through this working relationship, we're able to develop a better understanding of principal factors and events that affect market movement and price action. So for traders who would like to embark on this trading journey with me, please sign up for MT5 at the end of this session. Right, so tonight the proceeding will be as follows. For the first 5-10 minutes, I'll cover the basics of CFD and Forex, right? And the stock CFD, which newly launched by Phillip Futures, right? I'll talk about the characteristics, the features, the terminology of Forex and CFD trading. what are the margin requirements, how you calculate profit loss, and what are the corporate events that will affect the CFD pricing. After which I'll go to the main topic of night, which is the harmonic trading strategy. Right, so basically for this trading strategy, I'll go through how to use this harmonic trading pattern to analyze and identify entry and exit signals, and also cover Fibonacci concept and measurement principles that's essential to the harmonic trading, and the different types of harmonic trading patterns that's suitable to trade in different market conditions. Okay, and thirdly, right, if time permits, I'll do a quick demo on the MT5 platform, which is the MetaTrader 5 platform, on how to use the platform. Right, most important is how you submit orders, right, when to enter, when to exit, and how to read charts, right, and how to use the Fibonacci retracement and also the Fibonacci expansion tool from this MT5 platform. Right, and lastly, I'll try to answer all your questions on Q&A. Right, in case if I'm not able to do so, I will email you the reply, the answer to your email. Right, if I'm not able to answer the question tonight. Okay. Right. Forex trading basic. Okay, the basic of forex trading. So for those who are trading in the forex market before, I think you know all these features and characteristics. So the FX market is not an exchange traded market. So it is what they call the electronic OTC, which is the OTC stands for over the counter. Right, over the counter, that means it's not regular by exchange. Like if you buy Singapore shares, right, all the shares will go through the SGX, which is the Singapore Exchange. So this example for shares, right, it will be regulated by the SGX and MAS, right? Whereas for forex, it's not. Okay, so it's traded by financial institution like hedge funds, retail trader like you and me, and institutions or producers who want to hedge their produce, right, the pricing and all that. So it's traded electronic through platform label. Also for this case, right, you can trade to the MT5 from Phillip Futures. Okay, and it's the largest and the most liquid market in the world. Right, so for as of 2019, the average traded value is about $5 trillion. Right, so that is steady increase over the years. Right, so the convenience of trading forex is that it allows you to trade right almost 24 hours, 5.5 days a week. Right, so on the weekend the market is closed, but technically it's closed because no one's trading over the weekend. So for 5.5 days, market will be volatile, and you have the opportunity to trade in the 24 hours basis. Okay, so these are the jargon just to be familiar with, right? There's a bid and ask, right? Bid price and the ask price, right? Whether you want to buy or sell, right? So the bid price is usually lower than the ask price, right? So I got the price code by the system, right? The price is usually higher than the bid price. Okay, so like for example, EUR/USD, right? EUR is the base currency, right? And the code currency is USD. Okay, so you need to differentiate between the base currency and the code currency. So for this case, euro/dollar is traded in this case. The bid is 1.4, price is 4.4102. Right. So the difference between the bid price and ask price is your spread. So, right. So the spread. So in this case, for the example, the euro/dollar, the spread is 0.0002. Right. So 0.0001. Right. This is 1 basis point. This is 1 pip. That's the minimum amount that is quoted based on this example. Whereas for Phillip Futures, we have lowered the spread even further. Introduction of this pip pi, right, which is 0.0001 of this spread that allows trader to trade this forex. Okay, so it's helpful for traders who are doing scalping intraday trades, right? So you lower the amount of the pips will be lower than 1 pip. Okay, so next I touch on the margin requirements that's needed for traders to trade forex. Okay, so there's 2 types of margin stated on the platform itself, usually is the initial and the maintenance margin. So initial margin is the good faith deposit, the minimum amount that traders need to deposit into the account before I can initiate the position, whether you want to buy or sell or enter or exit. And the maintenance margin is the lowest amount that the account like OP can reach before you need to replenish back to initial margin, right? So that in the event if the equities fell below this maintenance margin, there will be a margin call that the trader will need to replenish or to top up to the initial margin. Okay, so on this, I just go through a very simple example how you can calculate your P&L with this simple formula, right? So for instance, this trader deposited 5,000 euro, which is US is about $6,000 initial margin to control $100,000 euro at a price of 1.38. So he entered at the long position at 1.1900. Right, so in the event if the price appreciates to 1.200, he decided to liquidate and exit the position by selling. Right, so from this we can calculate the P&L, the gross profit, which is the 1.200 minus 1.19 times the 100,000, which is the contract size. This will give a trader $1,000 gross profit. Okay. So the gross return, the return equity will be, you take $1,000 divided by the contract. The account value, which is 6,000, which the trader started from, so we give you a return of equity about 16.67%. Okay, so this is a very simple illustration of how traders can derive their P&L and calculate their profit or losses. Right, so next I go through another calculation that in the event if the price doesn't go in favor of the trader, right, if he buys at 1.19 for one contract of $0 at the price, instead of appreciating at 1.20, pull back to 1.18. So what happens is that if the trader decide to liquidate this position, right, you end up with a loss of $1,000. So this is a simple formula. You take the difference in the entry and the exit price, and then you times the contract size. Right, so it'll be a negative $1,000. So in this case, the trader will have a negative 16.67% of his trading positions. Okay, so this is a very simple. So with MT5, you show you live your P&L, your equity, you know, real time. So you don't have to really go through manually. But this is just to illustrate to you how you calculate your P&L. So in case if you trade a mini size like 1,000, then you just take the difference between an enterprise type at 1,000 instead of $100,000 contract value, right? So you just vary proportionate to the contract size that you're trading, right? Right. So next, I just go through a very basic touch on the CFD stocks. CFDs just introduced Phillip Futures. Just a brief intro to what's available for traders to trade on the MT5 platform. So basically, CFD is a contract. Right, it stands for contract for difference, so that's why it's short form is CFD. Right, so basically allow traders to participate in the market movement, price movement of a underlying contract, like a product that could be a stock, index, or commodities or currencies. Okay, so basically that's how the CFD works. Right, so basically for CFD traders to make money, they need to buy low, sell high, or if they want to short, then they sell high and buy low. Right, so this is the most simplified concept of a CFD trader, how they can make money trading CFD based on the price movement of the contract that they are trading. Right, so what is CFD? Okay, this is the some of the advantages for traders. When the trade CFD is that it allows traders to short sell. Right, short sell, that means they can sell at a higher price and then buy back at a lower price, below the entry price, in order to have a successful trade. Okay, so this is a short sell, because if for traders who want to buy shares, they can't short sell unless they have a SPR account, which is share broker lending, right? So that involve a lot of administration work, which is not convenient for traders who want to take short selling convenience to click of a mouse. Okay, next you have a flexibility of traders. That means they can turn from long to short and short to long, right? Depending on how they anticipate the price movement of their trading. And other advantages that allow traders to dive up to 10 times leverage, right, with a low margin requirement of 10%, right, for most of the CFD stock products available by Phillip Futures. Okay, so basically the gross profit and loss is similar to the example which I shown in the earlier slide, right? It's different between the closing price and opening price and the quantity of the CFD that you can trade. So this will give you either gross profit or loss, right, based on the entry price that the trader inside the market. Right. So the next question is how is CFD quoted? Basically, they're derived from reference instrument that's been priced in the underlying exchange, market, or liquid provider. So basically, like SIA, CFD through the MT5 platform, right? The price is derived with reference from the SGX. Underlying exchange for the SIA CFD is from the SGX Singapore Exchange. Okay, so this is an example of what I meant by deriving the price instrument from the underlying exchange. Okay, and the CFD prices only available if the underlying exchange is open or if there's sufficient liquidity. That means usually if there's a market holiday, then the if the underlying exchange is closed, then there will be no trading for that particular contract. Right, so this is CFD prices. Right, so the CFD allows traders the opportunity to trade in either a bull or bear market. Right, so just to recap, right, it allows traders to hold short positions. Right, that means to sell a contract first and then you buy back a later date, hopefully at a lower price from your short entry price. Right, so this allows traders to take a position on the underlying asset or the stocks without actually having to buy or sell the underlying asset itself. So holding short position for trade offer this trading opportunities, especially when the market is in bearish mood, right? And also with CFD allows traders to overcome the share delivery and settlement issue. So you don't have to consider whether you want to take up on a T+3 contract period or they need to settle the trade for short selling with the SPL account. Okay, so they don't need to maintain separate SPL if they want to short. Okay, so the next point for trading CFD is that it allows flexibility of trading strategies. That means it can change from bearish to bullish or bullish to bearish, right? And the last advantages of CFD MT5 is that it allows traders to hedge their positions. Right, that means with this MT5 hedge position function, right, it allows you to take a long and short simultaneously for the same contract, right, without having to open a different account, right? So this is one advantage for traders who are undecisive about the market direction and they want to take the hedge positions. And they can also use this MT5 to hedge their stock portfolios with the MT5 CFD stocks. Right, so the margin requirement, like I mentioned, is 10% for as low as, for example, the SIA stock CFD. So with this, you can diversify with more counters. You can take operation with stock CFD or with the Forex and Commodities. Right, so these are all subject to the initial margin requirements, right, and allows traders to diversify their portfolio. Okay. Right, so Phillip Futures offer the following types of CFDs, right? So basically there are 4 broad categories. Global indices CFDs, right? Example like US 30, Hong Kong 50, right? All this, right? These are all indices based on the underlying global indices, and commodities like crude oil and share CFDs, right? So share CFD, these are 3 markets that we cover: Hong Kong, Singapore, and US, right? So for Singapore, we have like SIA, Wilmar, DBS, etc., etc. Right? And the 4th type of CFD that we offer is the cryptocurrency, right? Like Bitcoin and Ripple, right? So for more information, you can visit our website at phillipfutures.com.sg, right, to find out what are the exact CFD contracts that we offer. Right. So next, we need to just briefly go through the corporate actions that will affect CFD prices. right? So basically, corporate exchange is an event that brings about a material change to the underlying stocks, event that initiated by firm that has impact on the share prices and the shareholders. So hopefully you can pay attention so that you don't get affected by all this corporation event. You have some CFD shares positions. Okay, some of the corporate action, for instance, will be like dividends, rights issue, warrant issue, bonus issue, stock split, stock delisting or suspensions. This will have from mild impact to a heavy impact on the CFD prices. Okay, so basically, example like dividends for dividend adjustment, right? This will apply to CFD with equities for positions that have been held to the ex-dividend date of the underlying shares. So where applicable, right, this adjustment will affect will be calculated based on the weight of the stocks in the index. Okay, so this dividends, in the event if the trader is holding short positions, the trader will have to the amount of the dividend will be deducted right from the trader's equity account, right? Plus the financing charges. For long position, the trader itself will receive the dividends after deducting the financing charges. Okay, so this is for dividends right issues. And for other types of corporate action like rights, bonus, warrant issue, most of the time it's not facilitated, right? So traders would have to liquidate the position before the X date, right? So these are the things that traders who trade stock CFD we need to think of for this corporate actions. All right, okay, so next I go through the main thing, and that is the harmonic price pattern strategy or harmonic trading strategy. Basically, this strategy is a strategy that helps traders to spot right possible retracement or extension of recent trend. So in the event that they can help traders to identify possible more robust entry and levels right for the traders. Okay. So before I dive right into the harmonic pricing strategy itself, I'll cover some important trading concept, which is the basics of Fibonacci. Right, this includes the Fibonacci retracement and Fibonacci extension that are essential for the harmonic trading. Okay, so we'll be using a bit of this Fibonacci ratios in this webinar, so hopefully you can get acquaintance with it. So the earlier you learn how the different numbers associate, and the earlier you'll be able to apply it into your harmonic trading. Okay, so let's start with the Fibonacci man itself. His name is Leonardo Fibonacci. Okay, just some of you wondering, he's not some famous celebrity chef, right? He's actually a very famous Italian mathematician, right? So one day he had this aha moment, and then discovered a very simple series of numbers that you create ratios describing the natural proportions of things in the universe. So this series of numbers derived right starting right with 0 followed by 1, and then you add 0 to 1, you get 1, which is the third number, and then you add the second and third number, 1 plus 1 will give you 2, and the fourth number, and so on. Right. So this is how the Fibonacci sequence works. So repeat, you add 0 plus 1 will give you 1, and then after that you take 1 plus 1 will give you 2, and then you take 1 plus 2 will give you 3, and so on and so forth, and until infinity. Okay, so this is the Fibonacci sequence. So here comes the magic. So if you divide the Fibonacci number by the previous Fibonacci number itself, this will give you the golden ratio. Okay, the golden ratio, right, which is roughly 1.618. Okay, 1.618. Okay, so some of my client asked me, 1.618, is this the 4D number? Okay, this one is not a 4D number, so please don't buy 4D with this number. Okay, so for foreign audience, 4D is a lottery game, right, by Singapore Pools, whereby participant plays back from 4-digit value from 000 to 999. Okay, so 1618 is the golden ratio, is not the. So how you derive this? That for instance, you take the 377, right? This 377 and then divide 233 will give you 1.618. So the higher the number, right, the more, right, digit you see behind 1.618. So you take 1597 divided by 987 to give you an even bigger number, right? So if you backtrack a bit and then you back to Fibonacci sequencing, if you do it the other way, you divide the previous number by a succeeding higher Fibonacci number. Instead of giving you 1.618, you give you 0.618. Right, so for instance, you take 34 divided by 55, this will give you a result of 0.618. Okay, so this is the beauty of the Fibonacci number. Right, so this is the difference. Okay, so the higher golden ratio is 1.618. The opposite of this is the 0.618. Then if you want to go deeper, you can find out by the author number, we give you 0.382. Right, so if, for instance, you take, right, 34 divided by 89, this will give you a Fibonacci number of 0.382. Okay, so for those who like maths, right, these are the numbers that you can play with all day. Okay, so later on I'll touch on how to use all these golden ratio and golden numbers, right, for traders to find entry and exit levels. Right, that's the more important thing for Fibonacci traders. Right, so this is the beauty of Fibonacci numbers. Okay, right, so actually Fibonacci concept itself is a very huge subject. Right, so due to time constraint, I'll touch on two main topics. That is the retracement and extension. Okay, so for retracement number, these are the numbers, right? Just get acquainted with, which is a 236, 382, 500, 618, and 762, and the extension level, which is 1.0, and then 1272, 1382, 1618, and 2.0. Okay, so of course it's good you can remember, but if you don't, it's fine, because the MT5 trading platform will have all the numbers inside the software, and then you just need to know how to use the tool, and then the levels will show itself, right, based on your the different level of retracement extension that you use. Okay, right, so so basically, for Fibonacci traders, they need to know what's the purpose of the Fibonacci ratios. So basically, the retracements, right, the Fibonacci retracement levels, right, it works on theory that after a big price move, right, the price will retrace, right, and then come back to a previous price level. So with this, for traders, they use the Fibonacci retracement level as a potential support and resistance levels or areas whereby they can find the possible entry levels. Okay, so a lot of traders will use Fibonacci, will be looking at all this level to find stops and to place entry levels. Okay, so this is the purpose of Fibonacci retracement, which is determine entry levels. So for extension, right, the basic function of Fibonacci extension is to help traders to determine possible exit level, exit price. Right, so how far will the price extend or run, right? So for traders who like to trade big swings or this, Fibonacci extension is a good tool for them to extend and find out or determine where and how far the price itself will to rise or appreciate in the future. Right, so these are the two broad concepts which we will touch on tonight. Okay, Fibonacci retracement and Fibonacci extension. Okay, so in order to find Fibonacci retracement and Fibonacci extension, you need to know what swing high and swing low. Okay, in the upswing, how you find your swing high or swing low. So the analogy, but it's a high or high low. Okay, so either high, high low, or swing high, swing low. Okay, So basically, high or swing is a candlestick that's at least two lower highs on both the left and right side of itself. Okay, later I'll show you a chart what it is, but basically this is a very basic diagram that illustrates the high, high low. So first high, which is on the bottom left side, right, and then you pull back to a first low high, and then market rally up again, form the second high, and then prices retrace back to the second high low. Right, so this is in an uptrend or an upswing. You have a series of high and lows. And in the case if the prices fell, or in the bear market, you have a downswing or downtrend, and prices will fall, and you will swing low and swing high, or low or low high. Okay, so they both meant the same thing. So first low, and then prices rally retrace up to a low high, and then it fell to rise, appreciate further, and after that the price fell again to give you the second low, and then prices recovered to give you a second low high, and then prices fell again. Okay, so this is a very basic concept of how uptrend or upswing and the downswing looks like. Right, you need at least two high or high low, or two low high or low for downtrend. Right, so this give you upswing or uptrend and downtrend definition. So in order to find all this Fibonacci retracement, right, you need to identify where are the swing highs and the swing lows. Right, so with this, after that you click on the Fibonacci tools on all these major points, and then the Fibonacci tool itself will show you different levels of the Fibonacci retracement and the Fibonacci extension. Right, so later the MT5 demo, I'll show you how to go about identifying and using the Fibonacci retracement extension. Okay, so this is the example of a Fibonacci retracement level. Right, so this is how you apply, right, based on this bi-hourly chart of Euro Pound, right, ЕURGBP. Right, so Euro Pound, right, so basically you need, the first step when you look at the chart, you need to find where the swing high and swing low. So basically the first swing high, right, the price itself came up for consolidation of range bound basis, and after it prices break out, you can see all these 5 candlesticks, right. Right, so this is the first swing high or high, and then prices retrace back, right, to give you your first higher low. Right, so prices, the low here somewhere below the green candlestick is your low. So this is your first higher low or swing low. Right, this actually the prices rally up. Right, so this green candlestick at the middle of the screen, right, is your high. Right, the high of this candlestick is your high swing high again, and then prices retrace back. Okay, so with the Fibonacci tool, you just need to find 2 points. Right, the point A here, right, the bottom left of the screen, and then the point B, which is the mid part of the screen. Right, so once that you click on the Fibonacci retracement icon, and then you just drag tools. This will give you the Fibonacci levels determined from 0 to 100. So in between you have the 236, 382, 618, and the 764. Okay, 764 is not shown here. Okay, so right, because right, so this is the market expectation, is that the price for this case will retrace, right, to recent level, right, 382. Right, so the price did not break through that. So 382 will be a very support level, a very strong support level that traders will look to take a long position if you want. Right, so after which, right, the prices later on the September 10th, the prices resume an upward trend, and it broke through the swing high, right, which is the 0 point, right, the point B here, right, prices broke up. This is the 10th of September, prices break out from this swing high, right. So this, right, so for this case, for Fibonacci retracement trader, the 382 becomes a very strong support level. So usually for traders, they will try to enter some long orders around this region, right. So this is a very simple example of retracement. Later I will show you on the MT5 demonstration how to find some of this Fibonacci retracement. Okay, this is a Fibonacci retracement level. So next we touch on how you find the Fibonacci extension levels. Okay, using back the same chart, right? So basically, I mentioned earlier, Fibonacci retracement, sorry, Fibonacci extension tool itself, right, is a tool used by Fibonacci traders or harmonic traders to find the profit targets or exit levels. Right, so for this case, in our trend, the idea is to take profit in the long trade, right, with this Fibonacci extension level. Okay, for this case, you need to find 3 levels, right? So 3 clicks instead of 2, right, compared to the previous slide. So again, the same point here will be the point A at the bottom left screen where my cursor is, right? This is the point A whereby traders will look for as a swing low, and subsequently prices rally up to point B, which is at the middle screen where my cursor is. This is the point B, and subsequently this is the point C. So we need these 3 points, right, for the Fibonacci extension to work, and then you project the different level, which Fibonacci FE618, the FE100, and FE1272. These are the 3 different levels that traders will look to exit their long position after they take a short, right, based on the Fibonacci retracement level. Okay, so this is the Fibonacci extension. So you can see that subsequently on the 10th of September, the price broke through the 61.8 level, right, which is right here where my cursor is, right. Then it's continue to rise, right. There's more buy on the euro, right, more buy on euro, and the price continue to broke the 100 level on the next day, and then it touches the 1272 level right before, right, it broke a bit of the 1272, and then find the resistance at 1382 to be too strong, right, for continue to rally up. So that's why up to subsequently there's a red candlestick on the top right corner of the screen. Okay, so these are levels that traders can look to take from somewhere at 61.100 or 127.2. So they can take some position at this 3 level or scale out their positions. Okay, so we look at the harmonic trading. So basically these are the characteristics. So harmonic trading is a methodology that utilizes the specific price pattern with the alignment of the exact Fibonacci ratios, which I covered in the previous few slides, to determine high probable reversal points in the financial market. It could be Forex, stocks, or commodities. So this strategy itself assumes that the market will trade in cycles and in patterns, and it will repeat itself over and over again. So the key to this strategy is to identify all these patterns and to enter and exit a position based on the high degree of probability that this price pattern action will reoccur itself in the near future. So if this setup was identified correctly, it's possible to identify opportunities with very limited risk. Okay. And another point to take note is that this harmonic trading works in all time frames, intraday, daily, weekly, monthly chart, and hourly charts that are used for traders who want to find setups for shorter term trading or day trading. So these are some amazing features of this strategy itself. It can work on short term and long term chart. And the other important concept to grasp is that the price movement are related to each other. So furthermore, the price pattern of the harmonic pattern itself is quantified by the alignment of precise Fibonacci ratios that it manifests between the harmonic and the Fibonacci relationships. Okay, and with that, you help to determine turning points. Okay, turning points means the market turn from bearish to bullish or from bullish to bearish. Right, so if it turns from bearish to bullish, they decide whether to take a long position from there, etc. Okay, so these turning points are the trades are executed at price level where the cycle or the pattern is changing. So keep the trader natural flow of buying and selling in the market. So as a result, this is what we call in harmony with the market, right? Because the trades are executed or implemented in historically critical areas that will be in harmony with the market. So that's why the terminology of this harmonic trading. Right. Okay, so basically there are 6 types of trading patterns. So these are the 6. The whole idea of all these patterns that they help traders to spot possible retracement and extension of recent trends. So and then we make use of other tools that's covered the Fibonacci and retracement extension. So we combine all these tools itself will give these harmonic patterns that will distinguish and possible area for continuation of a trend. So basically, there are six patterns: the ABCD, the three drive. Different patterns cover different market conditions, and there's a different variety to the traders' trading arsenals. Okay. Right. So they'll start with the simplest harmonic pattern, which is the AB equals CDs. Right. So this is the ABCD pattern. It's the simplest of all the 6 types of harmonic patterns. Okay. So this is the bullish. The left-hand side on the screen is your bullish ABCD, and the bearish ABCD is on the right hand side. So basically, for bullish, right, the traders will need to find and identify the A, B, and CD, right, which are known as legs, right, harmonic legs, right, AB, right, AB, and the CD. Okay, A is your, remember, is a swing high and a swing low, right, the downswing chart which I showed you in the previous few slides, right, this is your swing high, right, and then to low high and low low. So the prices will trace up to see which is your second low high and then subsequent low low. Okay, so it could be a swing high, swing low, swing high, swing low. So once you identify all these 4 points, right, the region around D is the region where traders will find the entry level to long. Okay, so this so the Fibonacci ratio numbers will come into play to help to measure the distance of A, B, and CD. Okay, so this is the bullish A, B, C, D. Right. So for the leg A, B, and the CD, right, theoretically they are supposed to be a same length, but of course in the market, you're not going to find perfect A, B equals CD. So sometimes the CD could be slightly shorter or slightly longer, right? So that's another variation of ABCD sign. Okay, so this is the ABCD pattern. Right. So the simple rule is that trying to find the length of AB equals to length of CD, right? Plus minus, maybe a few levels, right? But the time it takes for AB to travel from A, the price to travel from A to B, right? Hopefully is equal to time for C to D. Okay, in a perfect scenario. Okay, so same thing applies to bearish A, B, and CD. So when the price appreciate from C to D, right, the region D is the prices whereby trader will take short positions. Okay, so like I mentioned, the trading of harmonic patterns is about able to spot all these patterns, right, and sell at the completion. So these are the 3 steps for traders who want to use the harmonic strategy in their trading. The first step is to locate potential harmonic patterns. So there are 6 patterns which I mentioned in the previous slide, but for tonight's illustration, I use the ABCD pattern. Then the second step is to measure the potential harmonic pattern, where you measure the leg, the AB, and the CD, right, the length of it and the time travel. And after that, you will decide on your trading plan whether you want to enter or do you want to give up this path. So either you want to take a long position if it's a bearish ABCD, or you want to take a short if it's a bullish ABCD. Right. So these are the 3 basics that locate, measure, and entry. Right. So let's see how this thing works. Right. So basically, you're gonna see a lot of chart if you every day you will see charts patterns, something like what you see on the screen itself. So basically, you need to find swing high, swing low. So basically, mentioned earlier previous slide, I've already taught you how to locate the high lows or swing high, swing low. So A, B, C, these are all the crucial swing high, swing low points. So once you find A, B, C, D, right, these are all your reversal points that in the harmonic pattern, right? So you find A, B, C, D. The next step, right, is to measure the ABCD. So you use the Fibonacci retracement and the Fibonacci extension. Right. So with Fibonacci retracement, you click on A and then drag to B. Right. This will give you 618, which is at point C. This is the region whereby traders, will look out for, and whether will the price continue to appreciate from C, or will it fall right after they test the region around C. So in this example itself, the prices fell from C, and then traders will use the Fibonacci extension to find the 1.272 for the region D. Okay, so so this is the second step, right, to measure the potential harmonic price pattern for the ABCD. So the move BC is 0.618 retracement of AB, and the move CD, right, is 1.272 extension of BC. Okay, so this is the so roughly AB is equal to CD. Okay, so about the length of AB, right? It's equal to CD. So this pattern is qualified for this ABCD pattern, and there's a possible entry level around the region D. Right, so this is a step whereby traders decide whether they want to enter around the region D here, right at the bottom of the screen. And I can see. So once the pattern is completed, AB, the trader will decide whether you want to take a long position around D, and then they will put a stop right somewhere below the D positions for the point here. Okay, right. So this is the ABCD price pattern. So right, using back the same chart, right, euro dollar, that's euro pound, right, EURGBP, the 2-hour chart. Right, prices rally, right, pullback rally, right. So this is what we have seen in the previous chart itself. So let's combine all the steps for harmonic trading, right, the 3 steps, and how to use a Fibonacci. Okay, so remember that when I showed the first slide of this chart itself, right, it was on the Fibonacci retracement, right? So how you find Fibonacci retracement? You find point A, right, over here, and then you find point B, right? So you drag the Fibonacci, you find the point A, and then you find point B, and then you drag the Fibonacci, will give you the point C here, right? So this level 382 is your support level, whereby the prices stay constant at this region and did not fall any further, right? So subsequently the price broke out and then it rallied up, right? It broke above the Fibonacci 168 for the swing high at point B, and then it went up to point D, right? So it tested 1272. Okay, so this is 1272, which is point D, right? So AB equals CD. So the length of the cell, you can see that it's almost equal to each other, right? So this is the AB equals CD pattern. So around D region, right, traders can decide whether they can decide to take a short position. So the possible entry will be the red candlestick. You can see from here at the middle of the screen. Like I say, this red candlestick is usually used as a short signal for traders. Right after the price rally, they can take a short because around the region D. Right. So subsequently, prices fell. Prices fell, and right, potential exit level will be around 600 level again, right, which is this trader can use this level as the gauge to take profit, right, at 620, which is the price is around 0.9170. Okay, so recall that the harmonic trading strategy is three simple steps itself. The first step is to locate your harmonic legs of A, B, C, D, and then you measure if your Fibonacci retracement and Fibonacci extension. Right. Second step, the measurement, and the third step is entry to short in this example itself, or do you want to take a long position? Okay. So this is the Fibonacci harmonic Fibonacci retracement and Fibonacci extension. So next, we touch on this stock CFD itself, Capitaland daily charts from February 2016 to February, June 2016. Okay, so again, we go through three very simple harmonic steps. Right, first step to locate your ABCD. Right, so I think everyone will agree with me. These are the 4 different levels that the you can look at the screen itself. So AB equals CD. So in this case, AB, the length itself is slightly longer than the CD. Right, but basically you to find a 0.618. So after you find B and C, you use a retracement tool, right, at 618, right, prices fell, and then the prices tested leg D, right, is 1.6272. Okay, so potential entry level will be this green candlestick on the where my cursor is, right, the price around 685, and the prices really up to 760, right. These are the potential exit price level whereby traders can sell when there's a red candlestick here, right, on the right side of the screen, right. The level which is around the 0.618 level. These are profit level that traders can decide to take profit. Okay, so these are the examples of trading harmonic. So just to recap, right, you use your Fibonacci, retracement to find entry level, and then your Fibonacci extension to find profit level. Then after that, you combine that with your harmonic trading, right? There are 6 patterns, harmonic pattern, which the simplest one which I touch on today is the ABCD. Then your 3 drive, and then you've got your crab and bat and butterfly harmonic strategy. Then once you find all this pattern, you use a 3-step harmonic strategy, which is to locate, right, the ABCD pattern, and then you measure that with your Fibonacci retracement and Fibonacci extension, and then after that you decide whether you want to take an entry order into the market. Okay. Right, so with that, I'm coming near to the end of my presentation. So this is what I do for those who join me midway through the webinar. My name is Stephen Ong. I'm a presenter tonight, and I'm a Forex and stockbroker with Phillip. So for those who are new, and if you decide to embark on the new MT5 account with Phillip Futures, I can help you to strategize and develop a customized trading plan based on the Harmonic Trading strategy itself. Right, and SMS, WhatsApp, daily news, so that you can capitalize on the trading events and opportunities that arises over the course of the day itself. And if you're new to MT5, you're completely beginner level, I'll try to coach you and guide you how to use the MT5 to trade with these harmonic trading strategies. Okay, so if you, and also conduct reviews for traders on stock positions and CFDs and Forex and also with futures portfolio reviews. Okay, so those are busy working and how it execute and monitors your daily positions itself. So for new account, for those who want to embark on a new account, MT5 account, if you open your account by the end of this month, September 2020, you will have a one-to-one coaching session on this advanced trading strategy itself through the Zoom, right? Use the MT5 to trade harmonic. For the other 5 patterns, we should not touch on tonight because of time constraint. The other 5 will be the 3 drive, the Guardian, the crab, the bat, and the butterfly harmonic patterns, right? So remember, if you open by the end of this month, September 2020, you have an intensive one-to-one course on how to trade with this the other 5 harmonic patterns, right? Okay, so do scan the QR code to open MT5 account, and right now, like I mentioned earlier in the earlier slide, we have this promotion going on for MT5. So from the beginning of next month to the 13th of November, right? So once you start trading, you stand a chance to win lucky draw prizes, right? With a chance to win attractive prizes. So for instance, if you trade one lot of gold and silver, you stand one chance. So if you trade shares, CFD, or indices, or oil, or cryptocurrency, you have 2 chances of lucky draws. So some of the prizes are the Apple MacBook Pro and the Apple iPhone 11 Pro and Dyson products. Okay, so for more details, you can please scan the QR codes, right, and participate in this lucky draw, and also to find out more details. Okay, so these are the requirements. If we choose to embark on this MT5 journey, we meet the requirements for residents and also for foreigners going to trade through this MT5 platform, the necessary documents and the minimum fund requirements to activate your account. Okay, just to recap, if you choose to open an account, you need to fund your account. Your account has to be activated before I conduct this Zoom one-to-one session on the advanced harmonic trading strategy. Okay, so next I just go through briefly the MT5 demonstration, right? Just a very quick one. Okay, so once you have logged into your MT5, okay, this is the chart you see. Okay, so basically, tonight I'll just touch on how to use your Fibonacci retracement and extension. So on the top bar here, you can see where my cursor is. This is your Fibonacci retracement icon, and the one beside is the Fibonacci expansion. So I'll touch on the Fibonacci retracement. Right, so you can see this is the dollar yen chart for this rally, right? From center of the screen, it went up, high, 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 low, high, 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 low, swing high, swing low, swing high. Right, so let's say you want to find the retracement level for this retracement level, you need to find the low here. This is the low at the middle of the screen. Just click on this and then just drag up your Fibonacci retracement. You can see that right, the prices is quite stable between 38.2 and 50 level. Right, so prices did not fall any further, and subsequently prices recover rally up. So you can do the same thing for this retracement level and for this retracement level on the right side of the screen. Okay, so this is how the retracement level works. Okay, so right, so I'll delete this away. I will show you how to use the Fibonacci expansion tool. So this is a Fibonacci expansion or the expansion tool. You just click on this icon itself. Okay, click on A again, and then you click on A, and then you click on A, and then you drag to B, right, and then subsequently you go to A again, and then you this is okay. So I click on A and then go to B, right? Then subsequently you come to A again and drag to C. Okay, so these are the 3 points you can find out. So it give you a 618, 127.2, and 382. Okay, so you can see this is very similar to the ABCD we just touched on. So for A, B, C, and D. Okay, this one, okay, you can consider maybe a bit of retracement, but subsequently this we went up higher, and then it fell. Okay, prices also, if you are shorted somewhere around this region, for traders, they make some pips over here on the right hand side of the screen. Okay, so this is a very simple ABCD illustration on the MT5 platform. Okay, so so next I'll just go to the the demo. Okay, so the Q&A. Is there any questions for tonight's session? Okay, let me check. Let me see. First question of the night is okay, what's the length of A, B equals CD? So, okay, like I mentioned earlier in the chart slide itself, AB theoretically based on the harmonic trading pattern theory, AB is supposed to be equal to CD, but in reality, when you're doing live trading, AB is hardly equal to CD. So sometimes CD could be slightly shorter or longer, right? So from there, the trader will to make a decision whether to take a position based on the shorter CD or longer CD for this case. Okay, but theory wise, AB is equal to CD. Okay, so the second question is that when the prices are evolving, how do we know when A start, or the trick is to always find D, then test if there's a B, C, and D. Okay, so let me repeat the question. Okay, the question is when prices are evolving, right? Understand the market is changing. Then how do we know when the A starts? Or the trick is to always find D and then test if there's B, A, B, and C. Okay, so so if you understand my flow of my presentation, right? The concept is always to find A first. Okay, A is always a historical price, right? So you can see that for this, let's say live example itself, right? The MT5 platform. Okay, so this case, right, A is right at the center of the screen, right? A here, and then B, in this case B, and then C. C will be right this point where my cursor is, and then D will be if it is early in the day, this will be, but then subsequently the prices rally up. This D will be the my cursor is right now. Okay, so prices fell, and then around D, which is around 127.2 to 1382. Right, so this is the region whereby traders can enter possible short positions. Right, so DA is always a historical swing low or swing high, right? That's has formed before B and C, right? So D is the latest one. So if you identify the correct D, right, the pattern itself will be a successful one in this case, right? So for this case itself, yeah, and so around D is where my cursor is, whereby traders can consider to take a short position for this case. Okay, the other question is there any fee for MT5? Okay, the good news is there's zero commission. Okay, but there are financing charges. Right, so if you hold position overnight, there'll be financing charges. So for more detail, you can visit our website, to find out what are the financing charges. But if you're doing intraday charges, then there's no transaction cost, zero commission. Okay. So the next question: can trade futures on MT5? Okay, currently futures is not available yet. But in the near future, we are working on our side. The ops is trying to put this contract into the MT5, so just hold on to it. So once it's ready, we will announce the availability of futures contract that will be available for traders on the MetaTrader 5. Okay, I think this is the last question. How long is B to C? Okay, so how long is the B to C? That's a very good question. So B to C can vary, right? So how you know how long B to C is? So in this case itself, right, you can see on this chart, MT5 chart, you need how long is B to C? You can click on the Fibonacci retracement icon, like you show here, right here. Just click on A and then you drag to B. So for this case, it's tested around 50, right, 50 level. So sometimes, preferably, it varies between 382 and 168. Okay, so these are the in between the level is where B and C is supposed to retrace. So anything beyond 618, then the trader will decide whether to give up this formation because it's not based on the harmonic trading. Okay, so remember the retracement B and C theoretically is preferably between 382 and 618. Right, so for this example itself, we tested, I broke through 382, almost tested the 50 level, and then prices vary up. Okay, so this is the Fibonacci B to C. Okay, so one query is the Fibonacci on predicting these turning points. Right, this is a very good question. Okay, how accurate will depend on the trader itself. Okay, so how accurate the trading prediction is how you identify the ABCD, for example, ABCD levels. So if you identify the wrong levels, like long swing point, then your retracement and your expansion level will give you different level compared to other traders. Okay, so again, this strategy will take practice, right? You need to practice, right? Find the chart itself, and then you try to find your Fibonacci retracement and extension, and then you find ABCD for this case, right? And then you try to find the turning points. Okay, so B to C is one turning point, is a retracement, and then at the D level, right, it's shown here on the screen here, because this is another level, right? Falling. This is the turning level. Okay, so how accurate will depend on trader, how well versed the trader is with the harmonic and Fibonacci retracement and extension tool. Okay, so hopefully it's the last question. Right, the cable chart, 4-hour chart, 4-hour chart, and use the harmonic tool to understand where the price may move. Wow. Okay, first thing first, I can't give you advice. Okay, but this is the pound sterling chart. Pound sterling chart. Okay, so you can see 4-hourly chart. Okay, if you ask me, right, there's basically my cursor is the one at the top. If you recap, this is your point A. Okay, I hope everyone agree with me. Where my cursor is at the top middle of the screen, this is your point A, and then this is your swing high at this point in time. Where you see on the chart, this is swing high, and then prices fell all the way over to, I think, the 10th or 11th of September. Right, this is your swing B, your lower low, or swing low, point B, and then prices trace up. This is where my cursor is, this is where your point C is. Now question is whether is there a point D here. Okay, so right, basically for ABCD to work, the length here has to be equal to this AB length, right? But you can see that, just visually look at it, the length here is not even half, I think maybe half of the AB. So we don't have A, B, C, D pattern, but maybe there's some other pattern, maybe the crab pattern or the butterfly pattern, which I won't touch on tonight. But you want to know, then you need to open an account. Okay, so for this case, you can see that if you use your Fibonacci retracement, right, brothers again, okay, almost tested 38.2, right? So it's a region between this 32 to 33.6, and then prices fell. And then if you use your extension tool, right, then of course we are not there yet. So there's not a ABCD pattern. If your question is that's what. Okay. So if okay, I think there's one more question. Where do we set the stop for the ABCD pattern? Okay, that's a very good question. Right. So if we take a look at the dollar yen chart, Okay, dollar yen. Okay, dollar yen chart. If you look at this dollar yen chart, right? ABCD. Okay, this is your D region. Okay, the D and the micro Cs. So right. So for traders who shorted somewhere around the D region, your stock will be at least 3 to 4 pips above the high. Right. So usually that's how many traders will place their stop loss. So you can see the prices now is falling for this case dollar yen. For ABC, so your stop will be for short will be above the point D, above point region D for stop loss, and then if you're long, then you'll be somewhere below. You put your stops for these long positions. Okay, so I think that's all. So if any question, you can email me. Right, I think I don't want to hold up everybody's time. Let me get back my slide. Okay, so this is the end. This end for today. This is all the time we have today. So once again, I thank everybody for being a wonderful audience for tonight's webinar. So there'll be a link at the end of this recording for this webinar. We make it available in our follow-up and email to you. And if you have any query on the webinar or you'd like to get started, simply reply to our email and then we'll get in touch with you again. So again, this is Steve Wong signing off. Again, thank you and happy trading.